All right, let's chew on a wild question, one that really gets to the heart of our entire global financial system. Just imagine it for a second. You wake up, grab your coffee, check the news, and $1 trillion has just vanished from the world economy. Like, poof, gone. So, what happens then?
Well, the first reaction from the institutions holding all our money, you guessed it, absolute world-rending panic.
Instantly, you'd see a shockwave just rip through every single financial market on the planet. We're talking a meltdown of truly historic proportions. And for any of us with a stake in the market, a 401k, a stock portfolio, yeah, the first thought is going to be, uh-oh. But beyond that first gut punch, what would really go down? Okay, let's dive into it.
The first question for the powers that be wouldn't even be how, it would be where. I mean, where exactly did all that cash just vanish from?
Look, a loss this big, it's not coming from just one spot. It would have to be wiped out from these giant pools of capital. We're talking the stock market, government reserves, bond markets, or maybe even those super volatile crypto exchanges. Now, I know what you're thinking, and yeah, it sounds absolutely terrifying. But hold on, don't go checking your bank app just yet. This isn't about physical cash disappearing. See, most money these days is really just digital ones and zeros that represent the value of assets. The loss would be in the value, not the actual balance in your checking account. All right, so now that we've cleared that up, let's get to the juicy part, the immediate, chaotic market meltdown. The result here, it's completely unavoidable. The markets would crash. And I mean crash hard. $1 trillion hole just creates a black hole of investor confidence. And this visual right here, it just says it all, doesn't it? We are talking about a near vertical drop. Every major index from New York to Tokyo would absolutely plummet as the news got out. I mean, this is pure human psychology at play, right? Panicked investors would rush to sell pretty much everything, which creates this vicious feedback loop, sending the markets into a total freefall. And, amidst all that chaos, you'd probably see some really wild swings and stuff like meme stocks as traders try to game the pandemonium for a quick buck. But, in any crisis, people immediately start looking for a safe place to hide. So in a meltdown this big, where does the smart money run? What could possibly survive this? So on one side, you've got the traditional pillars like stocks and bonds. They're under incredible pressure. And on the other, well, investors are going to flee to what they see as safe havens, physical things like gold, digital assets like Bitcoin, and yeah, even the simple security of cold, hard cash. Let's just take a second and look at that number. $1 trillion. It's a figure so huge, so astronomical, it feels like it could just swallow the whole economy. But could it really? Okay, and this is where things get really interesting. While $1 trillion loss would be absolutely devastating, we're talking a severe recession, no doubt. The total global economy is valued in the hundreds of trillions. So think of this event like a cannonball hitting a battleship. It does massive damage, but it's not going to sink the whole thing. So let's bring this back down to earth. While your retirement account would be hurting bad, the fundamental systems that let you go out and buy a coffee, they would probably keep on chugging along, even in a very panicked economy. So yeah, your Starbucks budget is safe. Probably. Look, a crazy thought experiment like this isn't just to freak ourselves out. It's like a stress test, and it reveals some financial truths that are, well, timeless. So what are the key lessons here? First up, diversification is your best friend. We saw it, right? When the traditional markets were crumbling, other things like gold actually held their ground. Second, you have got to know how much risk you can handle before a crisis hits, so you aren't making choices in a complete panic. And third, and this is the hardest one, you have to master your emotions. The biggest losses usually don't come from the initial crash, but from the panic selling that happens right after.
So, what's the bottom line here? The sudden disappearance of $1 trillion would unleash historic chaos. It would cause a painful recession. But our global financial system, for all its problems, is just incredibly vast and surprisingly resilient. The world would eventually keep on spinning. And that, of course, leaves us with one last big question to chew on. This whole thing was about a hypothetical loss of $1 trillion. But what if it were 5 or 10? It really makes you wonder, is our complex, interconnected financial system way more fragile than any of us think?